Hey, my name's James Wilkinson, and in this video, I want to talk about the Federal Reserve, the American central bank. They had their meeting yesterday. They've held interest rates for the sixth consecutive time. Now, this will have an impact on UK interest rates, UK mortgage rates, more importantly to you, and house prices, which I want to cover in this video in total. So make sure you watch all of this. Don't just think you're not in America. This does have an impact on you living in the UK. Now, before we jump into the content, as always, if you haven't done, do subscribe to the channel over there and hit that bell notification. We've got new content every single day on this channel, and I want to help you understand house prices, interest rates, mortgages, what to do to buy below market value properties, lots of property education on here as well. So do subscribe and hit the bell. And while you're here, smash the like button, tickle the like button, do something to the like button, hit it. And maybe you do that out of love or anger, whatever you do, make sure you press it. That really helps us with the YouTube algorithm and gets us more views on this content. So Jay Powell, he has had his Federal Reserve meeting yesterday, and this does have a big impact on us in the UK. So 9 times out of 10, we will do what they say is follow the Fed. So if the Federal Reserve put interest rates up, so do we. If they put them down, so do we. If they hold them, so do we. Now, the Bank of England have actually said in the last few weeks, which we did cover a little while ago on a video on the channel, that this time may be different. It may be different if our inflation drops really quickly, then there might not be a need to wait for the Americans to drop their interest rates first. And so that is something that could happen as well. But most of the time, we want to see what is going on in America because our economies are so intertwined. So what are the Americans saying? What happened yesterday? Well, they are frustrated with the lack of progress with moving their inflation down. I don't know if you follow the inflation data. They brought their inflation down really quick compared to us, but then it got stuck at around 3%. And that hasn't budged for a good few months now. And where they're concerned is potentially having something called stagflation. And so stagflation is a bad situation to get into. And they're worried that this could happen over there. So stagflation is where you have high inflation, prolonged high inflation like they do right now, like we do, but also unemployment starts to go up and unemployment gets a little bit out of control as well. So you have prices going through the roof and you have unemployment growing. And that is something that America is potentially turning into right now. They've had good jobs data for a long time now, and they want to try and keep that, especially if you're a Democrat leading into the American election in November. They want to try and keep that data going, but it is getting a little tougher for them. And so stagflation is potentially on the horizon, and that is a bad scenario to get into. Now, what they did make clear in the meeting yesterday is they have no plans for rate hikes. I know from the comments you guys put that a lot of people that comment on this channel see this inflation sticking around, and the expectation is that potentially Bank of England, Federal Reserve, or other countries as well might increase interest rates. They made that quite clear yesterday. That is not something that they expect to happen. And that's important that they get that message out to the market, and that's been taken on board. So that is interesting that we've got that out of them. And that's the sort of thing that we watch these long press conferences for, to find out what do they actually think is happening. So they're not planning on putting rates up. That is very important. The next move is most likely to be down. The markets, how are they reacting to yesterday's Fed pause? Well, not great. So we've had data where we thought potentially the markets thought at one stage that the Fed would start dropping rates as early as March. Obviously, that's come and gone. Then it was the summer. And now they're looking like rate cuts are looking in America like they are not going to be until December. Now, the December meeting is early. Two reasons this might happen. One is the presidential election. The Federal Reserve do not want to be seen to be helping Joe Biden to get re-elected. They don't want to be political in any way. So if they do multiple rate cuts, then of course Trump's going to jump on that and say they're trying to help out Joe Biden. So the November election, the meeting is just a few days afterwards. And so if they did put the rates down then they couldn't be accused of being political in any way. So that's one reason that might happen. And the second, the markets are pricing that in, is just because this inflation in America is sticking. They're not getting any progress at all. The UK inflation is moving, right? That's the main thing. It is moving downwards, maybe not fast enough, but it's getting better now. It's definitely going to be going down again because of our energy price cap. So the next inflation data will be down. The Americans don't have that luxury. They've just got flat inflation, which is not great. So they want to see something happening before they consider the rate cut. Now, they don't know, this is interesting as well, how long it will take for inflation to drop in the USA. The British side, the Bank of England, are a little bit more open about that. They've said inflation is going to drop in May. We're expecting that. We know because of the energy cuts in costs that our inflation is definitely going to go down again this month, which is positive. They don't know. They have not put any timeline. They're not saying it will be a month, a quarter, 6 months, a year. They're just saying they don't know, which is a little alarming that they're not really sure how that's working. But the main thing that came from this J-Powell meeting is that rates are not likely to go up. They're indicating they will not. Even if inflation sticks or rises marginally, they are not planning to put up interest rates. That's very, very important. So that means the Bank of England, even if our inflation goes back up again, they would not likely either increase the interest rate. So that's very, very important. But the other thing that we've got to keep an eye on is the stagflation. That is high inflation and jobs being lost. If that happens, then the solution that they're kind of indicating and tipping their hat that might happen is, even if inflation's stuck at the 3%, if the jobs, people start losing their jobs in America, they might cut interest rates to stimulate the economy, even if they have the high inflation. So interesting stuff from America. You always should watch this kind of stuff and know what's going on in the market. It's good to get a balanced view on what is going on in the market. Let me know. What's your opinion? Who's going to cut first? The Fed or the Bank of England? Do comment below. Any questions or opinions? I love to hear those. I personally reply to every single comment on the channel. So take a moment to comment down below. Do smash the like button. Do subscribe. Do go and check out some more content on the channel, including this video right here.